Welcome to ForexTV.com. Today is Monday, October 27th. I'm Kathleen Reddington with your New York Forex Market Buzz. The Japanese yen made big gains on the euro and traded at a 13-year high against the U.S. dollar. And now for a look at the latest headlines from the CEP News Desk. European Central Bank President Jean-Claude Trichet hinted at a rate cut that might be coming soon at the Governing Council's next meeting, which is scheduled for November 6th. Trichet added, however, that such an action is not a certainty. New home sales in the U.S. gained slightly more than anticipated, moving up 2.7% in September to an annual pace of 464,000. Last month's drop was revised downward to a 12.6% decrease. Economists were expecting September data to fall 2.2% to 450,000. The M3 money supply growth rate slowed in September for the Eurozone, falling to an 8.6% in annualized terms. Economists, however, had expected a slightly more pronounced decline to 8.5% after the rate slowed to 8.8% from a year from August. Today we are joined by Stephen Leahy of Back by FX. Hi, Stephen. How are you today?
Doing very well, Kathleen. Thanks so much for having me on.
Anytime. The Japanese market is moving at a very quick pace, and it has made big gains on the euro and the U.S. dollar already today. The Japanese finance minister said he is worried about the volatility in the marketplace. Do you see any changes coming from Japan soon, and what would your strategy be for the yen?
I do have to kind of think back to a time period of, say, late 2003, early 2004, was the last time that I really recall a lot of Japanese bank intervention. They've made it pretty clear at this point in time that they do plan to intervene. Don't know when and where, but certainly for us, the absolute bull run of Japanese yen strength, there's no reason to change our long-term opinion of that. That being said, we certainly are going to see spikes lower in yen as Bank of Japan intervenes. In terms of long-term positions, we no reason to put on any long-term yen positions at this point in time, or long-term long yen positions. We do still think that the crosses that you and I have spoken about many times, euro yen, sterling yen, I just don't see a bottom as of yet. And so we think that between the fact that the Bank of Japan really is warning about some intervention to weaken the yen, and the fact that there just has been such a strong move, we wouldn't be surprised to see yen start to fall off a little bit here, kind of ease some of its slowing, and within that see a lot of spikes, generally in the Tokyo sessions, or about 7 a.m. East Coast time, again, historically, is when we used to see a lot of intervention from the Bank of Japan.
All right, and when the new home sales report came out this morning, the dollar weakened against the yen further, even though the news was positive. Now, it seems like currencies haven't been following calendar events at all. Do you think we'll ever see currencies return to following reports and charts and data like that?
That certainly would be nice. It would give everyone a little bit more leeway, or feel a little more confident to stand on their predictions. You and I spoke very quickly before we came on air, Kathleen, that a lot of the data that's coming out, a lot of the technical analysis that's coming out, really is meaningless at this point in time. It seems to be that there has been there certainly has been an overwhelming sense of panic in the world. But interestingly, the U.S. dollar, for as much as our economy is in deep trouble and we're leading the world into recession, the U.S. dollar has certainly proven to be the currency of safe haven. For global investors in the last couple of weeks here, as we've seen dollar strengthen so remarkably. So as to when will economic data start coming into play again, boy, I do not know. Certainly I'd hope by the spring, and I would like to think that sometime even sooner. But at this point in time, it really is, those FX traders who are real trend followers a little bit longer term have been rewarded immensely for that type of trading. For us here at Back by FX, we've actually switched to be a lot more shorter term and used a bunch of kind of pre-programmed algorithms that we use to stay real nimble in these markets. Find the trend that's going along there and hop on for short periods of time. But as far as economic fundamentals go, I think it's going to be a while before people start realizing that the markets always predict the future, 6 to 8 to 12 months ahead of time. And so things are, as bad as things have gotten, at some point we will have a turning point.
All right, and I want to touch on what you said about the U.S. dollar being a safe haven. Many people are saying that the dollar has retaken its place as a safe haven currency. How is that going to affect those that are currently trading the dollar?
One of the things that, again, you and I have spoken about for weeks, if not months, is that it seems to be more a race to see which currency pair is worst rather than which one is best lately in the last 6 months or so. U.S. dollar has been a safe haven, which goes to prove that the old adage of the dollar being a safe haven is correct, and does stay in effect. It'll be interesting to us to see the next Treasury data release about tick in capital flows to see have the large non-U.S. funds been taking this opportunity to strengthen treasuries to sell some of their holdings and therefore repatriate. So that being said, where does it leave us trading the dollar? Clearly, the dollar versus the majors, euro, sterling, and even Swiss, falling hard because of the G7 announcement this past weekend, and because I think we do need a reprieve from the 25% plus moves that we've seen in some of the pairs. We think you'll be able to start going short a little bit dollar soon. We spoke a few minutes ago about economic data coming out. The Fed is releasing their FOMC operations on Wednesday, and the official funds rate. Market's expecting a half-point cut down to 1%. If that doesn't get the dollar moving in the other direction, meaning lower, boy, I really don't know what's going to in the medium term of the next 3 months. So for us, we are going to try to go into this meeting of the Fed with a trade on. We probably will be short dollars. We're just looking for the right level to get involved in that trade as we prep for Wednesday afternoon.
All right, and finally, changing gears a little bit, I want to talk about the euro. The ECB finance minister said there is a possibility of a rate cut, but it's not certain. It seems like the ECB has a lot of catching up to do rate cut-wise. Is he just bluffing when he says it's not a definite? And what do you advise for the euro?
Good point there, Kathleen. Good debate that's been being had. The ECB over there has a mandate to maintain inflation at a certain level, down towards 2.0. Last number I saw, it was still running above 3.0 percentage points on an annualized basis. Therefore, they do have incentive and, in fact, a mandate to keep their rates high to fight that inflation. But their economy is in trouble just like ours is. And because, as you mentioned, they seem to be lagging us, and they had held rates high and even increased rates sometime in the last few months, they've got a lot more cutting available to them than we do here in the U.S. And so I don't think they're jawboning. I do think that his hint at lower rates is a valid hint by him. But I think what they're doing, what they're trying to do in this, is not say we're going to lower rates. I think what they're saying is we may be able to. And they're just trying to take their bias off the table. And so, normally by a finance minister saying that they could lower rates, I tend to think that they're biased towards lowering. In this case, they still have maintained for so long that they're going to hold rates steady and keep an eye on their inflation, that by him backing off that statement, I feel it almost neutralizes euro, doesn't necessarily bring it, in our eyes, to a lowering of interest rates in the Eurozone, just more keeping it steady in line with, any other broad-based emergency cuts like the 50 basis points we saw a week and a half ago.
All right, thank you so much for joining us, Stephen.
Thanks for having me on. I appreciate it.
This has been your New York Forex Market Buzz with Stephen Leahy of Back Bay FX. I'm Kathleen Reddington. Join us later this afternoon for PM Exchange right here on ForexTV.com.